Hi guys, welcome to Gold Price Daily Analysis. Today is Thursday, 28th of March 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We will start the core analysis right after a quick recap. We've been waiting for economic headers to be released. We got these headers from the United States. We've been waiting for the trade balance, which came above forecast, and the imports exports also came above forecast, and we have seen the gold losing ground immediately after these two headers released. Moving on to a strategy recap, we said to stay on the buy side and invest in any drop in the gold price, and also we told you don't take a position until the data is released, so you could make an informed decision and know what would be the direction. Moving on to the economic calendar for Thursday, it's a big day. We are looking for so many economic headers from different countries. From Germany, we are looking for the German CPI month to month with medium importance. Moving on to the United Kingdom, we are waiting for the nationwide HPI month to month and the nationwide HPI year to year with medium importance. Moving on to Spain, we will be waiting for the Spanish CPI year to year and Spanish HICP year to year with medium importance. Moving on to the United States is a big day from the United States. It's very important, and market movers are going to be released tomorrow. Mainly the GDP quarter to quarter, it's very important. Also initial jobless claims and continuing jobless claims and the pending home sales. Also we have a series of FOMC members to deliver speeches. Keep your eyes on the US data. That's it for the economic calendar. Move on to technical analysis. On the last trading session, we got a trading range from 1,308 to 1,319. Numbers are rounded and the market is still open. We do expect the gold spot to close above 1,308. Numbers are rounded and market is still open. Keep in mind that the US dollar is very strong and the numbers are subject for change. The moving averages for the 20 days at 1,302. For the 50 days 1,310, and for the 100 days is 1,280, and for the 200 days it's 1,242. We are above the daily symbol moving averages, all of them except the 50 days daily symbol moving average. We'll move on to the RSI readings. For the 1 hour, RSI is 31 in the favor of the bears. For the 4 hours, the RSI is 40, also in the favor of the bears. And in the 1 day, we have the RSI at 50 in the favor of the bulls. We are in a middle ground with more favor to the bears side. For the supports and resistance, supports are located at 1,306, 1,302, 1,300 and 1,298. For the resistance are located at 1,313, 1,317, 1,321. If the GDP tomorrow misses forecast, we may see 1,332 one shot tomorrow. That's all. Let's move on to the trading strategy. For the trading strategy, the trend is bullish and the price action is negative. We are above the daily symbol moving averages, all of them, and the US dollar is rising. Our advice to you is not to take a position until the GDP is released, the one that we talked about in the economic calendar section. So, why is that? Because we have talked about something called the inverted yield curve. Okay, so the market is now in the sentiment expecting a recession, and this GDP will be like a confirmation if a recession is going to take place or no. So if the GDP, the market is now expecting the GDP to come to 2.4%, and the last reading was 2.6%. So any number below 2.4%, this means there is a recession ahead. In this case, we will buy the gold and we will target 1,332 as the first target. The other way around, okay, if a surprise happened and the GDP came above 2.4% or above 2.6%, Okay, double surprise. This means that there will be no recession, at least in the foreseeable future. In that case, we'll sell the gold of a target of 1280. That's all for today. Please share, like, and subscribe, and I will see you tomorrow in another video.